Namaste, good morning. Welcome to 120th episode of AAA Weekly Webinar Series. As usual, we are very happy to connect with you. See, let us start without wasting any time. This is the time when all the insolvency professionals, all the bankers, and even the adjudicating authority, they are spending a lot of their time on avoidance transaction applications. Either the applications have been filed, which were filed long ago, those applications are coming for hearing, and the respondents are taking different kind of arguments in the court. So this is the time where the even applications are also being prepared by resolution professionals or the liquidators. The liquidator or the resolution professional, they are also supposed to convince the committee of creditors or SCC what is expected out of the avoidance transaction applications, and whether it is like if there is whether it actually makes a kind of a good scenario to file an appeal or not. So the regulations were changed, and in case any NCLT order comes on the avoidance transaction, the RP or the liquidator is supposed to go to the stakeholders or the committee of creditors to take their consent for filing an appeal on the order of NCLT in case there is any order. So therefore, today we thought that we should discuss about one, how to prepare an application for avoidance transaction, how to fortify your pleadings so that you get success, knowingly that the resolution professional is not equipped with very, very strong or expensive lawyers, whereas the respondents are coming to the court with the support of very, very expensive and influential lawyers. So therefore, it is very important that the strategy is very strong, and the briefing to the lawyer is also very strong. So therefore, we would like to start with Section 43. First of all, the preferential transaction. And the preferential transaction, it is very important to understand what exactly are the transactions and what are the basic considerations when we can determine that this is a transaction which falls under Section 43 of IBC. The application under Section 43 can be filed by either the resolution professional or by the liquidator, as the case may be. Both can file this application. What is the relevant time for the preferred transaction? Relevant time is also called look-back period. So in case the transaction has taken place with a related party, then the look-back period is 2 years from the date of insolvency commencement. And in case the transaction is with unrelated party, so therefore the transaction is with the transaction has to be within 1 year. So there are two basic threshold that we can even start thinking whether this transaction is under Section 43 or not. These two basic thresholds are that there must be a transfer of property, and there must be a transfer of interest of the corporate debtor. So the property and interest, these are the two things. In case there is any transfer of these two things from the corporate debtor, then only we can think about a preferential transaction. If there is no transfer of property, if there is no transfer of any interest of the corporate debtor, then this transaction cannot fall under Section 43 as a preferential transaction. Now, the definition of property, in case we see, it is provided in section 3, subsection 27 of the IBC. The property includes money. That means any cash or any bank balance or any kind of cash or its equivalents. Then goods, any kind of good, maybe it's a current asset or maybe it's a fixed asset. If there is any transfer of goods, that also would be considered as property. Then is the actionable claims. Actionable claims is anything which the corporate debtor can claim and can be recovered. That is actionable claims. That means any advances given, any receivables, sundry debtors, advance to employees, advance to associate concerns, advance to related parties, all are actionable claims. All kind of refunds are actionable claims. All kind of security deposits are actionable claims. So these are actionable claims. Then is the land, and then every description of property is something which is a residual word written in section 3, subsection 27 of IBC. It is irrespective whether this asset is situated in India or outside India. And every description of interest, including present or future or vested or contingent interest arising out of or incidental to a property, every description of property also includes a contingent interest. That means the contingent asset is also included in the definition of property. Contingent interest in any kind of property or any kind of goods is also considered as property. However, the second threshold, which is the transfer of an interest, that is not defined under IBC. So then we can actually look into the general definition of interest, that actually can be taken any kind of ownership rights, any kind of interest, or any kind of beneficial interest that can be seen as interest. So the first threshold is transfer of property or transfer of any interest, and the definition of the property is very, very large. So then coming to the next threshold. So this is the first threshold. Second threshold is that the transaction means transfer. Now the transfer of property, transfer of any interest, that must have been taken place. That must have been taken place with a creditor, with an existing creditor, an antecedent creditor, or a person who has provided a surety to any commitment, surety to any commitment, or grantor who has given any kind of guarantee for corporate debtor. So the transaction of transfer, first is the transfer, second is the transaction must take place with either a creditor, antecedent creditor, a surety, or a grantor. Now, the transaction can take place. The transaction can actually take place to an existing financial debt or an operational creditor or any other liability. So there must be a liability in the books of account, and that liability should be considered as a creditor, surety, or a grantor. Now, when such property is transferred, to a creditor or a surety or a grantor, it must have an impact. It must have an impact of putting such creditor in a beneficial position. When we compare his priority under section 53, then we see that a particular transfer has been made to shareholder or promoter, whereas they are the last in the priority. That means the transaction is preferential. The transfer of property or any kind of interest has happened to an operational creditor, whereas there are other unsecured creditor or government liability or the financial creditor, secured financial creditor. So therefore, that person, operational creditor, has got priority. He's actually got a beneficial position. So that means, first of all, there should be a creditor, and finally, in case of the transfer, that benefit has actually gone to him. That benefit has gone to him. So that is something which we can say that the let us try to understand now. The first condition is there must be a transfer of property or interest. Second condition is that this transaction must have happened within the look back period, which is 2 years or 1 year, as the case may be. Three, the transfer must have taken place, must have gone to a creditor, an existing creditor, or an existing surety, or an existing grantor. Then, in case we see that particular transfer, in case, for example, in case we transfer something to a secured creditor, in case we make some repayment to a secured creditor, the secured creditor in any case has a priority in the IBC. That would not mean that there is any benefit to the secured creditor. So in case we make payment of gratuity, in case we make payment of provident fund, which has the overall priority even beyond the secured creditor, that would also not be considered as a preferential transaction. So there are four things that I am trying to say that is very, very important. So we will actually come to various judgments where actually the many such things has happened. Very many such things have been decided. Now, when we find these transactions and the application is filed, we can also, in our application, we can also see what kind of order is prayed. Now, in case of a property transfer, and that property, we can say that the property can vest back to the corporate debtor, that the property must be transferred back to the corporate debtor, or that transfer can be cancelled, and then transfer can be invalidated. That kind of prayer also can be done. So in case the transfer of the property, then we can also say that the proceeds of that particular property must be transferred back to the corporate debtor. Although the word written here is corporate debtor, but in most of the resolution plans, this corporate debtor means nowadays the creditors. Because see, by the time that we try to, by the time we try to resolve the PUFE transaction applications, normally the company is resolved and the company has gone to successful resolution applicant, and the successful resolution applicant has not even considered the value of PUFE transactions while offering the amount in the resolution plan. So therefore, all this, whatever recovery we do, that actually will go to the creditors, not to the corporate debtor. That means SRA. That is because of the normal conditions of the committee of creditors. Now, the other kind of order that we can say, that in case of any fresh security interest has been created, any fresh security interest has been created by the company within the look back period, and where the position, where the priority of that particular creditor have changed from lower to upper side, that also we can say that that security interest may be released or that may be discharged, whatever has been created by corporate debtor within the look back period to a creditor, so that that creditor is getting unnecessary benefit. Then the court can also pass an order to pay such sums to the corporate debtor how much benefit has been taken by him. That actually has to come back to the corporate debtor or to the liquidator or the RP, as the adjudicating authority may direct. Even the adjudicating authority can also direct any guarantor whose financial debts or operational debts owed to any person were released or discharged by giving a preference, and that too to that person, the adjudicating authority can pass an order against that grantor who has been released during the look-back period. Any surety who has been released during the look-back period. So these are the kind of orders that we can seek from the adjudicating authority. Now, what are the kind of arguments that we have seen from the respondents, the promoters, or those creditors who have got this benefit, those sureties or guarantors who have got this benefit? They are saying that we have not acquired this property from the corporate debtor. So, therefore, we are protected. Certainly, they are protected. For example, the one asset is transferred. Suppose one car is transferred to promoters, and that car is transferred against their loan. That means a property has been transferred to promoters against their loan. Now the car has also been sold to a third party. Now this order, this section 43, 44, it protects those persons who have acquired the property from a person other than corporate. From a person other than corporate. Because the corporate debtor sold the property to promoters, promoters sold the property to somebody else. Now the RP or the liquidator cannot go through those third person, because see, they have derived their interest in good faith and also for value. They have derived their interest in the property in good faith and against value. So the order cannot be passed to third parties in case that property has been sold to third parties. Also, the respondents are saying that this we haven't got any benefit because we have purchased this property in good faith and we have paid full value for this. So therefore, the adjudicating authority cannot even go and pass an order against a person who is able to prove before the court that he has not got any benefit. He has paid the full value. And see, then he can actually be saved. Now, the respondents are also saying, because of the section 43, that this transfer was made in the ordinary course of business or ordinary course of financial affairs of the corporate debtor or the transferee. Ordinary course of the business, ordinary course of the financial affairs of the corporate debtor or the transferee. Now, this is something which is very, very kind of difficult thing to understand. What is the normal course of business and what is the normal course of financial affairs of the corporate debtor or the transferee. Now, let us take an example that a particular car loan is going on and the car loan installments are being paid regularly. There is no default in the car loan installments, and even the installments are being paid. Even the installments are being paid during the look-back period, whereas during the look-back period, no other secured creditors are being paid. During the look-back period, only car loan installments are being paid. Only those kind of loans are paid where there is a security and there is a normal installments which are being paid. There was no default. So this can be considered as ordinary course of financial affair of the corporate debtor or the transferee because see, that lender of the car, for him it's a normal thing to come and take the installments. For the company, because the company was paying the company was paying all these installments. So this is where I am saying this is important to see that the ordinary course of business or financial affairs is something that is coming up from all respondents. So while preparing the application, the liquidator or the RP should also say how it is not ordinary course of business, how it is not ordinary course of financial affairs of the corporate debtor or the transferee. Now, in case a company is operational and the raw material is being purchased on a regular basis and the suppliers are being paid on a regular basis within that as per the purchase order, that is an ordinary course of business. However, in case all the creditors are not being paid and only one or two creditors are being paid, that becomes a preferential transaction. If all the current creditors are being paid, then it is ordinary course of business. If all the current creditors are not being paid, I'm not talking about the old creditors, I'm talking about the current creditors. If all the current creditors are not being paid, then also it can become a preferential transaction. Now, there is another defense that normally is being taken by those who have some security interest, who have taken some security interest. They can always plead that we have taken the security and a new value has been created by the corporate debtor. We have given a new loan to the corporate debtor. We have created a new asset in the corporate debtor, and that new asset has come to us as a security. So that cannot be considered as a preferential transaction. A new security, a new value has been created in the corporate debtor. So this is also one of the defense which is being taken by the respondents. Now, one thing is very important, that even if the transfer of property, even if the transfer of this interest of the corporate debtor is transferred pursuant to an order of a court, that would not mean that it is an ordinary course of business. That would also give rise to a preferential transaction, even if there is an order of the court. So therefore, the court order would not be a good defense for the respondents. The court order that the court decided that this much money has to be paid. The court has decided that under section 138 that this much money has to be paid. So therefore, the promoters paid because of 138, because of the court order, because of the settlement in the court. That would not be considered as a defense. That would still be considered as a preferential transaction. So very, very detailed understanding which is required. Very, very detailed understanding which is required. So the first very detailed judgment on section 43, which we actually could see, is the in the case of Anuj Jain, IRP of JP Infratech Limited versus Axis Bank. This judgment is as old as 26th of February 2020 and is being used while making all the applications, and even in the orders also this particular judgment is being referred. So in this judgment, in fact, the court has given directions to resolution professionals. The first direction to the resolution professionals is that they should actually identify all transactions in the corporate debtor in the preceding 2 years. Then they're saying that first of all, you should segregate these transactions within 2 years and within 1 year. All transactions of transfer of property, all transaction of transfer of interest of the corporate debtor. Then you must see which are the transactions which has taken place within 2 years, which are the transactions which has taken place in 1 year. Then you also prepare a list of related parties to the corporate debtor, and you can take help from all kind of outside sources, the audit report where the related parties are listed. And nowadays there are two softwares that we use. One is Probe 42 and the other is Case Scan. And we, although they need some payment for analysis, but these two softwares give you a complete analysis of a particular company along with their related parties. And the related parties also can be seen with respect to the common directors and with respect to the common address, with respect to the common key managerial personals, with respect to the common domain name. So this kind of related party relationship can be seen in these softwares. So we normally prepare a list of related parties from all sources, and then we see how many transactions are happened within the related parties and whether those transactions are within 2 years or beyond. If the transactions are beyond 2 years, then we have to ignore it. Then we might even see, we might even see whether that transaction is also fit for section 45, section read with 49, or section 66. So first thing is that today we are only discussing section 43, and in the next episode we will discuss section 45 read with section 49. So today we are focusing on 43, and then this the Anuj Jain IRP JP Infratech Limited versus Axis Bank judgment also says that the all transactions must be analyzed by the RP. Now as I said, that first we should find the related parties from all sources. Then we should define the look back period date wise, find out the transaction with the existing creditors or the surety or the grantors, find out large transactions. Because this Anuj Jain judgment says that you should file separate applications under section 43, 45, 50 and 66. Because the pleadings, the arguments and the focus is totally different in all these sections. We should not file a combined application, although initially we filed all the combined applications, but this judgment, which is in February 2020, says that the application should not be combined. Even if there is a large transaction, and there is the chances of recovery is higher, then even separate application can be filed for a large transaction. Maybe there are 10 transactions under section 43. One option that we make all the 10 parties as respondents. So if we make all the 10 parties as respondent, then the pleadings will take more time. It may take 2 years when all the parties will file their reply, and then the liquidator or the RP will have to file their again rejoinder. So for any large transaction, a separate application can be filed under section 43. Of course, COC consent should be taken, because the COC might even say that you are trying to enhance the cost, CIRP cost or the liquidation cost. Then the contact details of the transferee is very important. Creditor, surety, grantor, very important, because see, otherwise a lot of time would be wasted and no notices would be served, and even the registrar will not accept the application without the appropriate email ID, without the complete address. So even if the transaction has taken place pursuant to a court order, that also should be included in your application. The transaction should not be in the ordinary course of business. We should actually say in our application that the transaction is not in the ordinary course of business. Now, the transaction can also be, certain transactions can also be preferential, undervalued, and fraudulent. Preferential, undervalued, and fraudulent. So the preferential part should be covered under section 43. The undervalued part should be covered under section 45, and the fraudulent part should be covered under section 66. Let me give you an example. Now, the example is that in case a set of assets, maybe cars, maybe properties, maybe office, is transferred to an unsecured loan who's a related party. So the first is that there is no money received against the sale, rather the property is transferred to a creditor. So way, whatever way the creditor is reduced, the liability is reduced, the liability of that creditor is reduced, that should be a preferential transaction. Now, in case the property is valued, the book value of the car is say 10 lakhs and the property is transferred at rupees 5 lakhs, and that too by way of just debiting the unsecured loan of the promoter, that means that the 10 lakhs minus 5 lakhs, that is the amount that we should claim under section 45. Now, so in case the intent in case the intent of transferring all these assets is only to defraud the creditors, only to keep the assets away from the creditors, then we can also cover it under section 66 subsection 1. All the three sections can be considered, all the three sections can be even invoked for even one transaction. One, that we should say that this is the preferential transaction. If the recovery is possible from the preferential transaction creditor, then the recovery should come back. Then there is no contribution required under section 66 subsection 1. In case the undervalued transaction has actually come back from the transferee of the asset, then also the total loss to the corporate debtor is covered. However, in case the recovery is not possible from under section 43, the recovery is not possible under section 45, then of course we can say that the similar amount can be aboard and can be even recovered from the promoters, because they actually have done this transaction with fraudulent intent. So a transaction can be covered in 3 also. Although I could see in a couple of judgments that the NCL80 has held that a transaction can be preferential, undervalued, and fraudulent, but not significant judgments have been seen. It all depends how it is argued. Now, even in some cases, like the transfer of car has happened place, some amount has been withdrawn from the bank during CIRP, car has been transferred during the CIRP. Now, I have seen that some RPs are making application under section 43 or 45 or under section 66. But these are the transactions which are basically covered under section 14 moratorium. This is the transaction which has happened during the moratorium period. So any transaction which actually takes place during moratorium period is invalid and it has to be reversed. Not only this, not only the transaction are supposed to be reversed, even the action under section 74, which is the misconduct during the course of the CIRP, and also under section 70, the contravening the moratorium under section 74, and the misconduct during the course of CIRP is 70. So even the action can be taken under section 74 and section 70 of the IBC. So such applications should not be filed under section 43 or 45 or 66. Such application is only supposed to be filed under contravention of moratorium, and that transaction would be immediately reversed. Now, in some of the cases, most of the promoters are saying that the cars were transferred 2 years back. Cars were transferred 2 years back. But I have seen the judgments where it is said that the burden of proof is on the suspended management. They have to prove when the car was transferred. In case there is no registration of transfer under the Motor Vehicle Act, then all the documents have to be submitted by the suspended management regarding the evidences of sale of car. And it is not the duty of the RP to find first the date of the transfer. The cars are transferred and the look-back period is not determinable. No evidence has been provided by the suspended management regarding the look-back period. Therefore, the burden of proof lies with the management, with the suspended management. they have to come back to say that the transfer has been done beyond the look back period. Now, there are two explanations in this section, which are very, very important. In explanation one, it is clarified that where a person who has acquired an interest in the property from another person other than the corporate, because see, we actually said that the third party cannot be invoked. The recovery cannot be ordered from the third party who have acquired the property in good faith, who has received the benefit from the preference or such another person to whom the corporate gave preference, in case had sufficient information, in case the third party had sufficient information of the initiation of commencement of insolvency resolution process of the corporate debtor and, and is a related party, it shall be presumed that the interest was acquired or the benefit was received otherwise than in good faith. Otherwise than in good faith. And unless the contrary is lies shown, and then it actually goes to uh, the, the other person. He has to explain. Now, there is another explanation too in IBC, which says that the how we can say that this person had sufficient information or opportunity to avail such information that this company has gone into CIRP. If a public announcement is released regarding the insolvency of the company, which is provided under Section 13, then that person would be considered as having full knowledge of the CIRP of the company. That person cannot claim that he was not aware of the CIRP of the company. So this explanation is also very important. If in such cases, the third parties also can be involved. The third parties who have actually acquired properties in good faith and have paid, they also can be involved, and they can also be asked that you have to revert this transaction and revert back and the vest back the property in corporate debtor. Vest back the property in corporate debtor. There are some assumptions to the transactions. Now, the one we are seeing that the transaction made in the ordinary course of business we've discussed. One, we are seeing that the fresh security interest has been created and the fresh, so that's a new value, new asset has been created. So this is where we actually try to see that various transactions. We have analyzed many judgments, very practical aspects of it, but I think Ankit joined a little late. So Ankit, can we take some of the questions, or in case you would like to add on the basics of Section 43, and then we would be also deliberating on various judgments, so that Section 43 is complete today. Because
Right.
then we will, in the next episode, we will talk about Section 45 and 66. In fact, Section 66 also has two parts, Section 66 subsection 1 and Section 66 subsection 2. That also we would be discussing at length. So in case we can see if there are some questions.
So one question is that is there any possibility of extending the look back period for Section 43? So that there Section 43 is very clear with respect to look back period. I don't think there is any judgment or any supporting available to extend the look back period.
No, my understanding is if the preferential transaction is also seen as fraudulent, if the intent is fraudulent, then we can always say that this particular transfer was only done to keep that asset away from the creditors. It's a fraudulent transaction.
Then you will
And
report it
for
as
the
Section
fraudulent
60,
transaction,
but then you'll make an application under Section 66, not under 43, right?
yes. Under Section 43, no.
Yeah.
Then we'll have to make an application under Section 66 only.
Yeah. Then we have a query that if there was a stay by NCLAT on the CRP and then the stay was removed and the CRP recommenced after 2 years, then what will be the look back period? So look back period, in my opinion, it should be from the original CRP date only, and unless and until there is an order which says that no, now will be the CRP date, or this will be the date will be considered to be the CRP date, which is in very exceptional circumstances we have seen those orders.
Right. Right.
Then softwares, I think everyone is asking for those softwares to be mentioned again. So one is Probe 42 and the other is
Case
Case
scan.
Scan. Karza Technologies has
Karza
a Case
Technology is
Scan.
the name of the company.
So then, mm, so then the question is from Mr. Naveen Bhatia. He says that the property purchased from CD during the look back period, it was a full market value. Then can such transaction be reversed? So somebody will have to explain or justify that this transaction is an undervalued transaction. Now, how can that be done? Let's say there is a property which the company has or the CD has, and the CD sells that property at circle rate. Now, there has to be then some evidence, maybe a valuation report, maybe something else to say that the actual value in the market for that property was much more. The banks have, regular valuations done. The company maybe had adopted a valuation report which showed a much higher value, which might be available with the bank records. So one will have to explain how the value is higher and how the transaction is undervalued. Otherwise, for the same value, the reversal is not feasible. Then, if the suspended directors paid outstanding GST dues after admission order by his personal account and filed Form GSTR1 3B, passing on the credit to buyer, how this transaction will be treated under CRP. So after CRP, the any returns which are furnished by the suspended directors without permission of the RP will be illegal. And I understand that he has, you're saying, done these transactions and also filed GST returns post CRP date for the purpose of giving credit to the buyer after selling the assets. So that would be an illegal transfer because does not have any sanction from the RP.
No, I believe what he's saying is that yes, the sale was made before, and once the CIRP started, so he paid the GST so that the buyer gets the input credit.
Mm.
So, like, what is the scenario? The scenario is as on the CIRP date, there is an amount due to a creditor on account of the GST which is not deposited. So
Mm.
that particular creditor has actually been paid, and that too during CIRP. That is something which is totally violating the moratorium. It is not even a transaction under Section 43. It is a transaction in like moratorium to
Violation of moratorium.
yes, yes,
Violation of
contravention of
Section
moratorium.
14, contravention of 14. Then we look at trust on corporate creditors reducing. Okay. Then we look at other questions. Um, Resolution plans are being approved by AA, keeping aside the PUFE transactions. When COCFCs are trying to monetize the PUFE amount through auctions, it is observed that adjudicating authorities are not allowing such transaction. In this scenario, how COCFCs can monetize PUFE transaction? Request to share possible solutions. So this is a
So I
question
think
that
what is
how
the
do you?
question? The question is that the resolution plan is approved and the buffet transactions are still pending.
Yeah.
And nowadays, the every adjudicating authority is asking for an affidavit that if I approve the resolution plan, who would be pursuing the buffet transactions? And even if we say in the resolution plan that all the proceeds from the buffet transaction will be shared to the creditors and not to the corporate debtor, not to the SRA, but still the adjudicating authority is asking for an affidavit that how the transactions would be handled, who would pursue this, and who will bear the cost. So they finally would like to say that the COC should pass a resolution that who would be responsible for pursuing these applications and who would bear the cost, and that resolution should be submitted to the adjudicating authority. And then the adjudicating authority will finally write a paragraph in the order that all the PUFE applications would be pursued by so and so, and the cost will be borne by so and so. So then it is resolved. But in case it is not done, then of course later on also the committee of creditors can even authorize any person, including the RP, including the liquidator, to pursue these application, or they can appoint a law firm so that the law firm can handle that case. And as per the resolution plan, the proceeds will go to creditors. So when the final order would be passed, instead of adjudicating authority will say that the uh, amount of recovery would be received by so and so, and it will be distributed to so and so as per the resolution which is submitted to us. That kind of order would be passed.
Right. So these were the questions that have come in, and personally, from my side, I think we need a very everyone, all the RPs, all the liquidators need to look at the balance sheet or the financial statements very thoroughly. And once we look into those financial statements and look at all the assets that are appearing there, there might be some cases where the assets were there and they have been sold. And if one can make a case of an undervalued transaction there, stating that the value that was the value at which the assets were sold were much lesser, or challenge the look back period, or challenge the periodicity that is claimed by the suspended management, that can actually be like that is really beneficial for the CD and for the creditors sometimes. So this can be done. In one of the cases, what we did was we looked into the balance sheet of the company. The balance sheet of the company was saying that the assets were, let's say, 500 crores of assets were there in the balance sheet. And whenever we used to go to the suspended management asking for details of those assets, those details were never given to us. So we said that if the details are not available, if the assets are not physically available for custody, our custody, and they're sitting in the financial statements, we said that okay, this is an undervalued transaction, and let the suspended management revert and say that how this is not an undervalued transaction, because if there is asset recorded in the balance sheet, the FAR is not being given by the management, suspended management. They are not providing the custody of the asset. Then let them explain that how can everyone understand and believe, what is the basis for everyone to believe that the assets were not sold on an undervalued basis just before the CRP. So this way also, assets which are sitting in the balance sheet and not available can be used in this manner.
I think there is one hand is raised in case we can take that question, and we will only request to be brief.
You will have to do that. I believe I don't have the rights there.
So I can ask Mr. Madan and Mr. Vishwanath to ask their questions.
Yeah, I'm Vishwanath here.
Yes, please.
Ankit, you were just mentioning about the fixed asset register. In most of the cases, the fixed asset register is not made available for what, and you said this could constitute an undervalued transaction. Is that
I said two things, sir. One, fixed asset register is not provided by the suspended management.
Mm.
List of assets or the value of assets that you are given physical custody of is not reconciling with the total value that is reflecting in the balance sheet. Especially when we compare the gross value of assets. Let's say a company has gross value of assets amounting to 30 crores and net value is, let's say, 10 crores. Now, when you take custody and get the valuation of those assets which are available physically with you, let's say the valuation comes only to 2 crores, and there is no list of assets provided by the suspended management. So you can easily say that the remaining assets have been siphoned off by the management, or they have been sold on an undervalued basis. This is what
But
I was
would
saying.
that,
Two
yeah, I
combinations.
agree.
Yeah.
Yes, correct. But would that, again, the 2-year period of, that has to be taken into reckoning, isn't it? Otherwise, this
No,
would be
we
legacy
already
assets.
have. No, we already have said that there is a judgment which says that it is the duty of the suspended management to prove the date of transaction. So in case they would say that all these assets were sold, they will have to tell us when it was sold and whether it was beyond the look back period or not.
And they will have to give evidence. Normally, management would say creditors came and creditors took away all the assets. Let them give proof of such an event. And that event happened 2 years back.
Okay. Thank you. And Ankit, one more, if you permit me to, just I'll be brief. In most of the cases, what I have come across as a chartered accountant also, I have seen that the financials are signed off saying that the fixed assets as if it were a going concern, and it has to be signed off as a going concern. I agree. But you end up with a balance sheet wherein there are no physical assets, but the balance sheet says that the assets are there. I'm not asking as a valuer, I'm asking as a chartered accountant. How is the chartered accountant supposed to go with this type of a CRP admitted case, wherein what is usually done is the previous year figures are carried forward and signed off?
The chartered accountant can only qualify the financial statements and say that during CRP he has done only a limited review based on the information available for the opening balances and the closing balances, and he has of course reviewed the transactions that have happened during the CRP period or during the period under review. He can give that qualification. He can issue a qualified audit report with respect to the balances appearing in the balance sheet.
Okay. Thank you. Thanks. Yeah.
So
That's the
Mr.
only
Ankit
thing he
can
can
also-
do. Thank you.
Thank you.
Hello, sir.
Yes,
Yes,
Uh,
Ashwini.
Whether the materiality concept is to be applied when we want to invoke Section 43, because looking at the volume of the CD's turnover or the size of the total assets and all these things, whether non-material items would also require 43 application?
I think materiality here will depend on the materiality will be actually, understood from the point of view of cost of the application, cost of pursuing the application, the value of transaction found. Let's say that COC understands that the total cost of filing and pursuing a PUFE application, including the various hearings, comes to, let's say, anywhere between a lakh rupees to 1.5 lakh rupees. And the transactions are only for 50,000 rupees. So there it can be recorded in the minutes that this is not worth pursuing.
materiality is only with respect to the cost of litigation, not the volume of business of the corporate.
Okay.
We have Mehraj Kumar, so we can even ask him.
Yeah, good afternoon, sir. This is Rajkumar. My question is, I've been faced with the PUFE transaction and failed selling under NRRA. So, how to deal with a situation like this, so that my dissolution application is through.
So, number one, that the dissolution application can also be filed even if your PUFE transactions are pending. The only thing that you have to provide for it, you have to provide for the who will handle these transactions and who will bear the cost. And in case the stakeholders decide, the stakeholders can decide, yes, they can decide that the NRRA can be sold to another person and all these assets can be assigned, all these claims can be assigned. Second is that they can appoint even the RP itself, they can appoint the RP only, and they can say that the RP will pursue these applications. However, he will pursue this not in his capacity as RP, but as a general person who has the information, and he will pursue and he will be reimbursed the cost whatever he incurred. Third, that they can appoint a law firm and they can say that the law firm would enter into an agreement with the creditors that the law firm will take this much of money from the creditors, and whenever the money will be received, the law firm will have the duty to inform the adjudicating authority that this money should be distributed to the creditors in this manner, which is already decided. So these are the options available with the liquidator for dissolving
So the law firm also sometimes says that, okay, our lump sum charges for pursuing this application for the next 2 years is this much. They can be paid that money, or that money can be made part of liquidation cost. And therefore, that is also a way of paying the law firm in advance for pursuing that application.
And suppose, sir, in case of I have exercised all the options. So in that case, see, in the books also and in the law also, it is written that first of all, COC has to, if nobody comes forward, so it will be assigned to COC to.
No, the COC also has to give a consent. Any person, any COC will have to give a consent whether they are ready to take over this responsibility or not. In case they do not take this responsibility, RP will have to continue. RP can try for sale of NRRA. RP can try the COC members to take it over. RP has to minutize that they have refused. RP has to bring a proposal that it can be delegate it to a law firm. RP can take out a proposal to the COC that yes, they can delegate to me in my personal capacity, not as RP. But if everything is declined, then the RP can or the liquidator can file an application for dissolution with a prayer that the necessary directions may be even given to the creditors for handling the applications under PUFE.
Thank you, sir.
After exploring all possibilities.
Okay.
Hello, sir. This is Amarendran from Chennai. Thank you so much for the insightful discussions. I have a slightly complicated issue.
Yes, yes.
A bank enforced a guarantee against the promoter just after CRP started for around 5 crores. And the promoter paid the bank and he had an outstanding of 5 crore in the books, director's loan. He tried to set it off. I told him, you cannot set it off. You know, I have to recover this. And I put an application because he was not cooperating, saying that this is a transaction under 43-44, whereby actually paying the bank, you know, he had prejudiced the rights of certain other creditors and he paid the loan. You know, I would have gone in the batting order as per CIRP. Surprisingly,
yes.
Any questions?
No, I think I thought that your question is complete.
No, it's not complete. It's not complete. So I filed the application, but that application I was told to withdraw by NCLT, saying that, look, this is like a recovery transaction. NCLT, I mean, IBC, this is not, CRP is not a forum for NCLT for recovery. You please go and file a suit in High Court or whatever to go and recover these funds. Whatever happened to the bank and this, it's a different matter. So to file a suit of 5 crore recovery in High Court, I'll have to pay stamp duty of at least 15 lakhs. So I put a resolution before COC and COC simply abstained. They were not interested in this tamasha after 3 years of all this. You know, so more or less drop the matter. I'm just telling you, I mean, what we RPs go through when we try to, you know, do these type of things.
So the promoter, in fact, the personal guarantee was invoked.
Yes.
The promoter paid 5 crores of rupees.
Yes.
And promoter also tried to say that whatever amount was shown as recoverable from me, I have paid back.
Correct.
That's what is the transaction.
That is a transaction.
So you can now see your view is that you can file the application for recovery of amount from the promoters.
Correct.
So in case we also can say that this amount which is taken away by the promoters, that is with the intent of like keeping the money away from the creditors. That is first, it is crossing the threshold of section 45 subsection 2, read with section 49. It is a transaction of like gifting it to someone and not taking it back, and also under section 49 with the intent to keep this money away from the creditors. So in case you invoke section 45 subsection 2 read with section 49,
okay,
that order can be passed by the adjudicating authority. As regards the recovery of debt from various parties, now, for example, the company has something like 1,000 debtors and some loans and advances. In case the RP goes to, or the liquidator goes to NCLT, which originally I think the law was made like this, but because of the capacity of the NCLT, I think we have seen various judgments where the NCLT is saying that we can't be used for recovery of the debt. Although
yes,
in some cases we have seen that the adjudicating authority passing the order of recovery, but of late they are not entertaining simple applications of recovery. We are doing something like saying that the third party, like section 45 subsection 2 read with section 49, but that is also taking time. So preferably the commercial courts would be better in case you go to commercial courts, in case the amount falls within the financial limits of the commercial courts. Those commercial courts would be more helpful in recovery.
in this case, I was told that we can't go to commercial court because it exceeds 5 crore. I had to go to High Court, Madras High Court.
So therefore, if the COC is not interested, then I don't think there is any obligation which remains with the RP.
Correct. 2 months back in a COC, I put this as a resolution, asked them whether they were interested in following up, and told it will cost 15 lakhs and plus another 4 lakhs for lawyer fees. They just abstained from it, actually, which I reported to NCLT.
Absolutely. I think that is what is the closure of this transaction. In case the COC is not interested in recovery, that's all final.
Thank you.
So, Ankit, we have a few judgments of Section 43. We will now start our next episode, which is 121st episode would be. So some of the judgments of Section 43, where whatever we have said today, that would be kind of corroborated with those judgments. And then we will start Section 45 read with Section 49. So we have collected a lot of material, a lot of judgments, thanks to my team who actually helped me in all this process. And this also gives us learning how to make application. In our experience, our own law firm, which is AAA Legal, which we don't use for our own cases because see, we have to keep a distant relationship. So the outside lawyers who work with us, and we are the AAA Legal is taking up only those cases where we are not interested party. But then overall, we have an experience of filing more than 200 such applications in the last 6.5 years. So that experience that I would like to share with all of you. This is the only objective of this kind of episodes. Thank you very much.
Thank you. Thank you, everyone.